So far, the 2023 bull market has continued into 2024. Year to date, the S&P 500 is up 5.59% and at all-time highs. My personal investment accounts have followed this trend. While this is nice to see, the reality is that stock prices will not always go up. There can be months and even years where they are deeply negative. These price gains are just on paper and highly impacted by market sentiment. In the short run, the market is a voting machine, but in the long run, it is a weighing machine. That is one of my favorite quotes by Ben Graham, the father of value investing and Warren Buffett's mentor. What actually matters is the earning power of the businesses you are investing in. A stock is not just a price which moves up and down. It's an ownership stake in a real business. Ideally, you are investing in companies who continue to grow their earnings and cash flows year after year. Over the long term, this will increase the intrinsic value of the stock. It also increases the business's capacity to reward shareholders with things like dividend payments. A growing business allows for a growing dividend. This is real cash flow in your pocket, regardless of how the market values your stock at any time. In today's video, I'm going to share how my dividend growth stock portfolio paid me $529 in dividends last month, on top of over $9,000 in on-paper gains. Additionally, I'll update you on the overall progress of my portfolio and all the individual stocks I invest in. Let's roll the intro. My name is Zach, this is Dividend Data, and you should leave a like and subscribe to the channel if you enjoyed the video. Throughout, I'll be using my stock research and portfolio tracking tool, dividenddata.com. I just released a new update, and I'll share 3 highlights. First, you can see a combined view of your investment accounts on the Your Portfolio page. This is now the default view and lets you get a full picture look at your investments. It applies to each tab on the portfolio tracking tool. You can use the same portfolio selection bar to choose and edit a specific account. Second, the Your Watchlist page has been updated so that it's automatically filtered by stocks whose current price is the lowest below their 200-day price average. This lets you easily tell which stocks are trading down so you can buy the dip. Third, you can now sign in with Google. This single sign-on makes it closer to a one-click process. It's much easier for new users and faster for existing users if your account is already created with Gmail. I'm working hard on new product updates, and they are coming out every couple of weeks at this point. For example, in the prior update, I added a download feature where you can download all your portfolio and watchlist data, plus all the data in the stock research tool. This lets you keep your own records and do custom analysis. Dividenddata.com will only keep getting better and better. In stock terms, the intrinsic value continues to grow. Become a member with the link in the description and pinned comment. Now let's dive into my portfolio. My dividend account is now valued at $155.8 thousand. With $110.3 thousand invested, my total return is 41.26%. That's a $45,000 gain. This account has 13 total stocks, with it heavily concentrated among my top holdings. These stocks include Microsoft, Altria, Exxon, Disney, Visa, Broadcom, T. Rowe Price, Apple, Kroger, PepsiCo, EPD, Chevron, and APD. In general, the companies in this portfolio have reliable business models and are growing earnings. I try to focus on stocks which grow their dividend payments on an annual basis. Some trade at higher multiples backed up by their faster growth rates. Others trade at lower multiples with slower growth rates. Overall, total return is the goal. Microsoft, ticker symbol MSFT, is my number one holding at around 26.7% of total value. The majority of this position was purchased in 2022, and I'm up 70% so far. After a slow 2022, earnings growth has accelerated again. There is a clear path to continued growth with the expansion of their Azure data center business and their new AI software suite. This will lead to continued earnings and cash flow growth. It powers a very sustainable and growing dividend. The 10-year dividend CAGR is 10.35%. The payout ratio is around 30%. It trades at a much higher multiple than when I bought, but the business is poised for continued underlying growth. The Altria Group, ticker symbol MO, is my number 2 holding at 12.8% of total value. I have a 4.64% total return. This company is much more of a value stock, trading at a very low profit multiple. However, the economics of the business continue to improve long term with low single digits annual growth. growth. Altria is a dividend king with over 50 years of consecutive dividend increases. It may not seem like it for those who are new to analyzing the company, but those sharp declines from 2007 and 8 are from the spin-out of Philip Morris International and Kraft Foods. The dividend is growing at a 4.14% 5-year CAGR. The payout ratio based on free cash flow is 80%. That is high, but intentional and sustainable. At current prices, the stock has a 9.7% dividend yield. I feel very comfortable buying at a near 10% yield on a company that, in my analysis, will only continue to slowly grow. In my opinion, I think Altria will generate reliable shareholder returns from here, even if we enter a deep bear market. In fact, Altria is the only stock I bought over the past month. I bought 10 shares at a cost per share of $40.35. I have mostly been stockpiling cash and investing less during this recent bull run. However, I have continued to reinvest my earned dividends. In January, I earned $529.02 in dividend income. That was my highest individual month of dividends ever. This was fueled by $464.33 from Altria, $38.73 from Disney, and $25.96 from PepsiCo. My Altria dividend bought 11.10 shares, exceeding my recent purchases. In total, I now have 50.9 shares earned from dividend reinvestment. This helps create that dividend snowball effect, which I discuss so often on the channel. So far in February, I've earned $78.17. That is my lowest month in the quarterly dividend rotation. It included $12.18 from Apple and $65.99 from EPD. The 3-month rolling average of my dividend income is now $361.63. In the history of this account, I've earned $11,635 in total dividends. That was $3,515 last year and $607 so far in 2024. I have a lot of upcoming dividend payments adding up to $535. This includes $154 from ExxonMobil, $76 from Microsoft, and $110 from T. Rowe Price. My annual projected dividend income is $4,583. This is $1,145 every quarter, $381.92 every month, $12.56 every day, and 52 cents every hour. Altria is my top dividend payer, making up over 42% of my current projected dividend income. This is due to its very high yield on cost. Overall, my dividend income will continue to compound over time. This is due to many factors. First off, all these businesses are growing and increasing their dividend payments. This can often come at high rates. I reinvest those dividends, acquiring more shares, increasing my future income. On top of this, I'm regularly investing new capital, which buys even more dividend growth stocks. This all creates a virtuous cycle which will compound over time. Dividend growth investing has a core return regardless of what the stock market sentiment is at any time. This is real growth, not just on paper gains. Please leave a like, share, and subscribe to the channel if you want to see future portfolio updates. Sign up for dividenddata.com. If the software helps you identify just one better investment, then it pays for itself. Thanks for watching.